For any investor looking at Mahindra & Mahindra, the story seems pretty clear. It's a powerhouse of SUVs, a king in the tractor market, and it's making a lot of noise about its new electric vehicles. It looks like a complete picture. But what if the most important move for Mahindra's future, the one that could truly re-rate the stock, isn't about flashy new cars? What if it's a small, almost overlooked deal worth just 555 crore rupees? This is the story of a very big bet on a part of the business most of the market is sleeping on. It's about a strategic move that plugs a massive hole in Mahindra's portfolio, a weakness that has held back its potential for years. This is the story of the SML Isuzu acquisition, a deal that could be the silent catalyst that builds a third massive pillar for M&M and unlocks tremendous value for its investors. While the market is focused elsewhere, this move could fundamentally change how the company is valued for the next decade. To understand why this deal is so significant, we have to break down the company as it stands today. For most investors, the M&M story is straightforward. It rests on two incredibly successful pillars. First, you have the auto division. This has become an absolute force in the SUV space. Models like the Thar, XUV 700 and Scorpio N are blockbusters, and they've been consistently taking market share, with their revenue share in the segment hitting a dominant 27.3%. This part of the business is firing on all cylinders. The second pillar is farm equipment. In India, Mahindra is tractors. They are the clear market leader with a staggering 45.2% market share, providing a stable cash cow foundation for the entire company. It's this reliable backbone that funds their bigger ambitions. On top of this, you have the much hyped EV story, the Born Electric platform, and the vision for future mobility. This is where most of the headlines are. So you have a leader in SUVs, a king in tractors, and a promising player in EVs. But there has always been a huge gaping hole in their strategy, a blind spot so big it has capped their growth potential. And that blind spot is the broader commercial vehicle market. This brings us to the core of our analysis, the acquisition of SML Isuzu. In August 2025, Mahindra announced it had acquired a controlling 58.96% stake in the commercial vehicle maker for about 555 crore rupees. Following this, the company is set to be renamed SML Mahindra Limited. On the surface, this is a minor transaction for a giant like Mahindra. But this is the move that plugs that gaping hole. While Mahindra completely dominates the light commercial vehicle segment, the sub 3.5 ton vehicles with an incredible 54.2% market share. Its presence in the heavier segments was almost non-existent. Before this deal, Mahindra's market share in the crucial truck and bus segment above 3.5 tons was a mere 3%. This is the territory where giants like Tata Motors and Ashok Leyland rule the roads. It's a massive market, critical for the country's logistics, and one where Mahindra was just a marginal player. This acquisition is a direct assault on that weakness. This isn't just a purchase, it's a declaration of intent. Mahindra is no longer satisfied with being a two-pillar company. It is building its third pillar. Why this deal is a game changer? So how does this one deal transform Mahindra's future? Let's break down the four key arguments for why this is a potential multi-bagger catalyst. Argument 1. Instant market share and a platform for attack. The most immediate impact is market share. With one move, Mahindra instantly doubles its market share in this heavy CV space from 3% to 6%. But this is just the starting point. Management has laid out an aggressive roadmap. Capture 10 to 12% market share by FY31 and over 20% by FY36. SML Isuzu, formerly the respected Swaraj Mazda, is not just any company. It has a strong legacy and a loyal customer base in a niche where Mahindra was weakest, buses. SML holds a solid 16% market share in the intermediate and light commercial vehicle ILCV bus segment. This gives Mahindra an immediate and profitable entry into markets like school buses and public transport. This isn't just buying market share, it's buying a ready-made platform to launch a full-scale offensive. Argument 2. The synergy and profitability play. The real intelligence of this deal is in the bottom line potential. SML Isuzu is known for its frugal engineering. Mahindra is a giant with massive economies of scale. Let's look at the numbers. In FY24, SML Isuzu reported revenues of 2,196 crore rupees and an EBITDA of 179 crore rupees. It's a stable, profitable business. By integrating operations, the new SML Mahindra can unlock huge efficiencies. Think of it in three parts. Shared sourcing. They can get better prices on raw materials by buying in bulk for both product lines. Platform consolidation. They can use Mahindra's R&D, especially in CNG and EV tech, and apply it to SML's platforms, fast-tracking new product launches. Network unification. They can leverage Mahindra's massive dealership and service network to sell SML products, dramatically increasing their reach. This isn't just about selling more trucks. It's about building a more efficient and profitable CV business from the ground up. Argument 3. The untapped growth engine of commercial vehicles. While passenger cars get the headlines, the CV market is the lifeblood of the Indian economy. As infrastructure spending grows, the demand for goods and people transportation is set for a massive long-term structural boom. Mahindra has now positioned itself perfectly to ride this wave. This acquisition is the final piece that allows them to compete across the entire CV spectrum, from the last mile delivery vans they already dominate to the heavy duty trucks and buses that form the backbone of the industry. This deal transforms Mahindra into a full range CV player, ready to challenge the duopoly of Tata Motors and Ashok Leyland. This is the untapped growth engine the market seems to be underestimating. Argument 4. The genius of the deal's valuation. Finally, let's look at how the deal was structured. This wasn't a high premium acquisition. It was a masterclass in capital allocation. Mahindra bought its controlling stake from the promoters Sumitomo Corporation and Isuzu Motors for just 650 rupees per share. At the time, this was a massive 63% discount to SML Isuzu's market price. Think about that. They gained control of a profitable, established company for nearly two-thirds of its public market value. Even the mandatory open offer to public shareholders was set at 1,554 and 6 fines per share as per regulations. After the deal was announced, SML Isuzu's stock rallied far beyond that price, which is a clear sign the market understood that Mahindra got the better end of this deal. For an investor in Mahindra, this means a significant asset was added without overpaying, preserving capital for future growth. Addressing the risks, the bear case. Now, no analysis is complete without looking at the risks. A great strategy is one thing, but execution is everything. First, there is integration risk. Merging two different corporate cultures and supply chains is a major challenge. Any delays could push back the expected synergies. Second, the competition will not just stand by. The CV market is a battlefield dominated by entrenched players like Tata Motors and Ashok Leyland. They will respond aggressively, which could lead to pressure on margins for everyone. Finally, the success of this gamble hinges on Mahindra's ability to innovate on the new combined portfolio. They need to execute on their long-term vision to hit those ambitious market share targets of over 20%. Conclusion. So, to bring it all together, Mahindra & Mahindra has long been a titan resting on two pillars, SUVs and tractors. The market knows that story well. But this acquisition of SML Isuzu for just 555 crore rupees has fundamentally changed the narrative. This is a calculated, strategic and brilliantly valued move to build a third powerful pillar in the commercial vehicle market. It gives them a launchpad for a decade-long plan to capture a significant piece of the industry. While the EV story is exciting, the SML deal provides a grounded, profitable and clear path to growth that the market seems to be overlooking. This is the kind of hidden catalyst that often precedes a major re-rating for a stock. So, what do you think? Is the SML Isuzu deal Mahindra's secret weapon for growth? Or are the execution risks too high? Let me know your analysis in the comments below, and if you enjoyed this deep dive that goes beyond the headlines, make sure to hit that subscribe button and turn on notifications. Thanks for watching.